I didn't make $10,000 by catching the perfect trade. I didn't make it by predicting the market. I made it by stacking tiny wins, so small they looked useless, until one Livermore trick turned those scraps into a fortune. Most traders will never even know this trick exists. But once you do, you'll never look at a small win the same way again. And before I break this down for you, do me a favor. If you're watching this right now, hit that subscribe button so you don't miss more trading psychology breakdowns like this. Smash the like button to push this out to more traders, and tell me in the comments where you're watching from. I love seeing this community connect across the world. Now let's get into it. Most traders ignore small wins. They want fireworks. They want the $5,000 overnight move, the jackpot that makes for a screenshot flex on social media. But here's the irony. That obsession with big wins is what destroys accounts. Because when you're hunting for the huge trade, you over-leverage. You take setups that don't fit your system. You break rules, you chase, you pray. And 9 times out of 10, you blow up. That's where Livermore was different. He understood that markets aren't conquered in one bold strike. They're conquered in layers, in steps, in patience. He would start small, probe the market with what he called test trades. If the market confirmed his thesis, then he scaled. Not randomly, not emotionally, but deliberately. That's the size trick. He didn't try to force the market to give him money. He let the market prove itself first, and then he pressed when it mattered. Now, when I first read about this, it sounded boring. I thought, what's the point of making $100 over and over again? I don't need crumbs, I need real gains. But that mindset was the exact reason I was stuck. Because what I didn't realize was that those crumbs weren't the goal. They were the proof. Proof that my system worked. Proof that my patience paid. Proof that I could survive the emotional battlefield without self-sabotage. Think of it like a fighter in a boxing ring. He doesn't go for the knockout in the first 10 seconds. He tests his opponent. He jabs. He watches. He looks for weakness. And only when he sees the opening, when he knows he has the advantage, does he throw the big punch. That's how Livermore sized his trades. That's how professionals treat the market. Let me take you back to one of my own trades. My account wasn't big, just a few $1,000s. I spotted a setup I liked, a breakout pattern I'd seen before. Instead of betting big, I went small. I took a position that barely moved the needle. The trade worked. I cashed a $180 profit. Old me would have been frustrated. But this time, I saw it differently. That $180 was proof. The setup worked under current market conditions. So what did I do? I re-entered with bigger size on the next signal. That one paid $800. Again, I didn't stop there. When the third setup lined up, I pressed harder. That's when the magic happened. Over $10,000 booked on a move that looked average to anyone else. It wasn't luck. It wasn't prediction. It was patience, discipline, and Livermore's size trick in action. But here's the brutal truth. Most traders can't do this. Why? Because small wins trigger their impatience. They get bored. They think, what's the point? And so they throw away their discipline, they size up recklessly, and they get crushed. They forget that the small win isn't about the money. It's about the information. The small win tells you the market is aligned with your edge. That information is priceless. And this brings me to something you must understand. Trading isn't just math. It's psychology layered on top of math. If you can't respect the process of small wins, you'll never earn the right to size up. And that's what Livermore meant when he said, successful traders always follow the line of least resistance. Size is never random, it's earned. Think about that. Earned. Not given, not guessed. Earned. The first time I really absorbed this, it hit me like a gut punch. All those years I had wasted chasing the home run trade, when the real secret was sitting in front of me the entire time. Build proof, then scale. Simple, boring, and unbelievably powerful. Now let me share something even deeper. When you scale correctly, it doesn't just grow your account, it rewires your brain. It forces you to detach from outcome and focus on process. You stop asking, will this trade make me rich? And instead ask, what is this trade teaching me? That shift is everything. Because when the market rewards you with a small win, your discipline is validated. And when you respect that, you gain the confidence to size up responsibly. That confidence is what carries you to the $10,000 gains. So let's pause here. Right now, I want you to ask yourself, do you respect your small wins? Or do you throw them away in search of something bigger? Be honest. Because the way you treat small wins is the way you treat your entire career. Dismiss them, and you dismiss your edge. Honor them, and you build the foundation for scaling like Livermore. And as we go deeper into this, I'm going to show you exactly how to structure your size so you're not just gambling bigger, but pressing intelligently like Livermore did. We'll break down the psychology, the math, and the discipline required. But it starts with this: never underestimate a small win. That's the seed of your fortune. Here's the thing most traders never realize until it's too late. The market doesn't punish you just because you lose money. It punishes you because you size wrong. You take the wrong risk at the wrong time. And that's exactly what Livermore understood better than anyone else. He knew the timing of size was more important than the timing of the trade. Let me explain what I mean. Every trade has two parts: the entry and the exposure. Most traders obsess over the entry, candlestick patterns, indicators, price levels, but ignore the exposure. How much of your account is at risk? How much fire are you playing with? And here's the irony: you can have the best entry in the world, but if your size is wrong, you'll still lose. On the flip side, you can have an average entry, but if your size is smart, you'll survive long enough to hit the trade that makes your month. Livermore used to call it testing the market. He never just threw his whole stake in at once. He would probe first: light position, minimal risk. If the trade moved in his favor, he didn't just hold, he added. That was his genius. He pyramided into strength, not weakness. Most traders do the opposite. They add to losers, they double down on red, and they get wiped out. Now let's be brutally honest here. The first time I tried to pyramid into strength, I failed miserably. Because it feels unnatural. You know why? Because your brain screams at you. You take the first small win, maybe you're up $200, and then adding size feels like you're risking what you just earned. It feels like you're giving the market a chance to snatch it back. That fear is overwhelming. And if you're not trained for it, you bail out too soon, you don't scale, and you leave thousands on the table. I remember one trade that almost broke me. It was a clean breakout on a mid-cap stock. My first position was small, $300 risk. The trade went in my favor immediately. I was up $250 in minutes. The plan was to add when it cleared the next level. But when the breakout came, I froze. I couldn't pull the trigger. All I saw was the $250 I might lose if it reversed. So I sat on my hands. And sure enough, the stock exploded. It ran so far that if I had added the second position, I would have cleared nearly $4,000. Instead, I cashed out my little $250 and watched the rest slip away. That night, I couldn't sleep. I kept replaying it in my head. Why did I freeze? Why couldn't I add? And that's when I realized I didn't respect the size trick. I still thought like an amateur. I treated small wins as the reward instead of the signal. Livermore didn't look at his first profit as the prize. He looked at it as confirmation, as the green light to press harder. And that shift changed everything for me. From then on, I started treating my first win as proof. Proof that the market was in sync with my system. Proof that I had earned the right to size up. And when I reframed it that way, the fear started to fade. But let me be real with you. It's not about flipping a mental switch and suddenly becoming fearless. Scaling up feels terrifying at first. And that's where most traders stop. They think the fear is a sign they're doing something wrong. But fear doesn't mean stop. Fear means you're growing. The key is to make that fear manageable by scaling systematically, not emotionally. Here's how I did it. Instead of doubling my size instantly, I created tiers. My first entry was 1 unit. If the market moved in my favor and confirmed the setup, I added another unit. If it kept going, I added a third. Each add was funded by the profit of the previous move, so I wasn't risking new capital blindly. I was leveraging the market's own money. That's Livermore's trick. Build into strength with profits, not hope. And once I started applying this, the results were insane. I'll never forget the first time it clicked. A trade on the S&P futures. First entry small, second entry on confirmation, third entry into momentum. By the end of the run, what started as a $500 risk turned into over $12,000 in gains. Not because I predicted the move, but because I respected the size ladder. Now, let me pull back and give you the deeper psychology here. When you size up too soon, you're basically betting against uncertainty. That's gambling. But when you wait for confirmation and then size into strength, you're aligning with the market. You're no longer forcing your will. You're letting the market prove itself. That's the essence of Livermore's philosophy. Don't fight, don't guess, don't hope. Wait, watch, then strike. And I know what some of you are thinking. But won't adding size later reduce my average entry price? Yes. And that's the point. Think about it. Would you rather have a small position at a perfect entry or a large position in a proven move? One makes you right, the other makes you money. Livermore always chose money. This is where traders get stuck. They want to be perfect. They want to nail the bottom tick or the top tick. But that obsession with perfection blinds them to the real game, which is exposure management. Livermore wasn't the best predictor of price. He was the best manager of size. That's why he could ride moves for millions when others got shaken out. So here's what I want you to take away from this part. Scaling isn't about aggressiveness, it's about intelligence. You're not swinging for the fences, you're building a staircase of conviction. Every step higher isn't just profit, it's validation. And when you frame it that way, you'll start to see your small wins differently. They're not scraps, they're signals. They're the proof you need to earn your way into bigger size. And let me tell you this, once you experience the power of scaling into strength, you'll never go back. The first time you watch a trade grow from small position to massive win, without feeling like you're gambling, you'll understand why Livermore's trick is timeless. Because it doesn't rely on prediction. It relies on patience, discipline, and the courage to build when the market invites you in. But here's the warning. This only works if you stay disciplined. The moment you start scaling into weakness, the moment you add size to losers, you've flipped Livermore's trick into a suicide pact. That's the dark side of size. Magnification cuts both ways. And if you don't control it, it will destroy you. In the next part, I'll show you exactly how I nearly sabotaged myself by misusing this trick, and the painful lesson that forced me to respect size as both a weapon and a danger. Because understanding Livermore's trick isn't just about learning how to win. It's about learning how not to blow yourself up in the process. Here's the part nobody likes to talk about. The danger. The razor edge of Livermore's size trick. Because yes, scaling into strength can transform small wins into $10,000 gains. But if you misunderstand it, if you twist it even slightly, it becomes the fastest way to blow your entire account. And I learned that the hard way. When I first started testing this strategy, I thought I understood it. Start small, scale up when I'm right. That was the formula, simple enough. But here's the problem. I let my emotions hijack the process. I wasn't really scaling into strength. I was scaling into hope. And hope is poison in trading. Let me tell you about the trade that nearly ended my career. It was on a biotech stock. The setup looked perfect, breakout forming, volume coming in. I entered small, just like the rules said. It ticked up a little. Barely a profit, but in my head, that was enough proof to add size. So I doubled down. Then the stock stalled. Instead of waiting, I convinced myself, this is just a pullback, I should add more. So I did. Suddenly, I was in with triple the size, and the market turned against me. You can guess what happened next. The tiny profit I thought was confirmation vanished. My oversized position unraveled. Within an hour, I was staring at a loss bigger than a week's worth of gains. And worse, I froze. I didn't cut the trade. I told myself it'll come back. It has to come back. That's how fast the size trick flips from brilliance to disaster. That night, I sat at my desk in silence, the screen still glowing in front of me. I remember staring at the numbers, sick to my stomach, thinking, how could I be so stupid? And then it hit me. I had completely misunderstood Livermore's wisdom. Scaling wasn't about chasing. It wasn't about forcing a trade to work. It was about letting the market prove me right before I increased exposure. My mistake wasn't the loss itself. It was that I had broken the philosophy. This is where most traders fail. They hear scale up, and they think it means add size until you're right. That's not Livermore's trick. That's just gambling with extra steps. Livermore scaled only when the market invited him. He didn't beg, he didn't force, and he didn't argue with price action. He added size only when the market rewarded his first position. But here's the deeper lesson that nobody wants to admit. The moment you add size, every weakness in your psychology gets magnified. If you have no discipline, size makes you reckless. If you lack patience, size makes you impulsive. If you can't cut a loser, size will bury you. That's why so many traders blow up when they try to scale. They think they're upgrading their strategy, but what they're really doing is upgrading their flaws. And that was me. I upgraded my flaws. I turned my impatience into oversized bets. I turned my stubbornness into devastating losses. and it almost cost me everything. The turning point came when I revisited Livermore's writings with new eyes. He wasn't preaching aggression. He was preaching precision. His size trick wasn't about ego, it was about humility. Start small because you admit you don't know. Add size because the market has proven you right. Cut losers quickly because you respect the market's power. It was less about being bold and more about being brutally honest. I realized that I had to rewire how I approached scaling. That meant putting rules in place that I couldn't override in the heat of the moment. For example, I set a rule that I would never add size unless my first position had already produced a locked-in profit. Another rule: I wouldn't add to a trade more than twice, no matter how strong it looked. And the most important rule of all: if the trade reversed against me, I didn't add, I cut. Period. Those rules saved me. Because once you put structure around size, it stops being dangerous and starts being powerful. Without structure, size is a weapon that turns against you. With structure, size becomes the lever that multiplies your edge. And let me tell you, the difference in my psychology was night and day. When I sized recklessly, every trade felt like life or death. My emotions spiked, my palms sweated, and my decisions got sloppy. But once I put those rules in place, I felt calm. I wasn't gambling anymore. I was building positions like an architect, brick by brick, only when the foundation was stable. Think about it like this. Would you build the second floor of a house before the foundation is solid? Of course not. But that's exactly what traders do when they size too fast. They build on sand, and then wonder why everything collapses. Livermore built on concrete. That's why his method worked. Here's something I want you to really let sink in. The size trick isn't just about growing your account. It's about surviving long enough to grow it. Most traders never make it that far because they self-destruct first. They get one taste of scaling, misuse it, and they're out of the game. But if you respect it, if you apply it with patience and discipline, it becomes the bridge between small, consistent wins and the life-changing profits you dream about. I'll be honest with you, I had to lose big to finally respect this. And maybe that's the way it goes. Pain is the best teacher in trading. But I share this with you so maybe you don't have to go through the same fire. Maybe you can learn from my mistake and cut years off your journey. So let's make this practical. If you want to use Livermore's trick without blowing yourself up, here's the formula I live by now. Start small. Always enter with a position size that feels almost too small to matter. Demand proof. Wait for the market to reward you before you add. That reward might be a breakout, a level hold, or a momentum surge, but you don't decide, the market does. Add responsibly. Each addition should be smaller than your first entry. Think of it as building layers, not stacking a pyramid upside down. Cut losers fast. If the structure breaks, get out immediately. No negotiating, no, maybe it'll bounce. Cut it. These 4 rules are my guardrails. They keep me from turning a powerful strategy into a dangerous mistake. And they're the exact framework that took me from bleeding losses to banking 5-figure wins. But here's the kicker. Even with rules, even with discipline, the size trick still demands something most traders can't give: emotional resilience. Because once you start scaling, the money gets bigger, the pressure grows, and your mind starts playing tricks on you. And that's where we're going next. In the next part, I'm going to walk you through the mental battles I faced when I first started hitting $10,000 gains. The fear, the self-sabotage, and the voice inside that told me I didn't deserve it. Because mastering the size trick isn't just about strategy, it's about mastering yourself. And here's where the trick begins to reveal its deeper power. It isn't just about numbers on a screen, it's about how your psychology adapts to those numbers. Most traders, when they see a small win, immediately dismiss it. It's only $50. It's only $100. That doesn't matter. But Jesse Livermore understood something most people still miss. The market doesn't pay you in straight lines, it pays you in steps. The size trick he mastered wasn't about chasing the giant leap, it was about scaling at the right time so that even those tiny steps added up to something enormous. I remember staring at my account one night after a series of small wins. On paper, it looked unimpressive, just a few $100s. But something inside me shifted when I asked myself, what if every one of these wins could be the seed of something larger? That's when I revisited Livermore's writings, his principles about pyramiding positions and compounding gains. And suddenly it clicked. I didn't need to hit home runs. I needed to keep hitting singles and let the size strategy do the heavy lifting. Think of it like climbing a mountain. Most traders try to jump from the bottom straight to the top. They take oversized positions, hoping one miracle trade will save them. But in doing so, they expose themselves to risk that wipes them out. Livermore's method was different. He climbed step by step, each small gain a ledge to pull himself higher. And once he had firm footing, that's when he would increase size, never before. It was discipline wrapped in patience, and it's why his method still resonates today. But here's the challenge. Most traders can't stand the slow burn. They want the thrill of big wins. They crave instant gratification. And that's exactly why they sabotage themselves. They double their position size after one good trade. They triple it when they feel lucky. And when the inevitable losing streak comes, they're left devastated, wondering what went wrong. The truth? They violated the one rule Livermore never broke. Never increase size until the market proves you're right. When I first applied this, it felt almost counterintuitive. I'd win a trade, and instead of celebrating by jumping in bigger right away, I forced myself to stay steady. I waited for a series of small wins to stack, then carefully increased position size just one notch, not recklessly, but methodically. And then slowly, I began to notice something remarkable. My losses didn't feel as devastating anymore because they were coming from profits, not from desperation. My wins began to build on each other, creating a cushion that gave me both confidence and staying power. That cushion became the bridge to my first $10,000 gain. And let me tell you, it wasn't dramatic. It wasn't some wild moonshot trade. It was boring. It was methodical. It was Livermore's trick playing out exactly as he designed it. The small wins compounded, the size adjustment kicked in at the right moment, and suddenly I was sitting on a gain that would have been impossible if I'd chased it outright. That's the beauty of this method. It sneaks up on you. You don't feel like you're getting rich. You feel like you're just doing the work. And then one day, the numbers in your account shock you. But here's the part most people don't want to hear. It only works if you stay brutally disciplined. You can't cut corners. You can't rush the process. You can't treat small wins like they don't matter, because they are the entire foundation. I've seen traders laugh at $50 gains, dismiss $100 profits as not worth their time. And those same traders are the ones who blow up accounts, searching for shortcuts that don't exist. They're blind to the truth Livermore mastered. It's not the size of one win that changes your career. It's the discipline to let your size evolve over time. And this is why the size trick is as much about psychology as it is about trading. Every time you respect a small win, you're training your brain to value consistency over thrill. You're rewiring yourself to see the market as a long game, not a slot machine. And that mental shift is what unlocks everything else. Because once you stop chasing, once you stop gambling, you start trading. And trading is where the money lives. So the next time you close a small win, don't roll your eyes. Don't think it's meaningless. Ask yourself, how can I stack this? How can I use Livermore's method to let this seed grow into something greater? That's where the magic is. That's where the transformation begins. And if you stay with me, in this very video, I'm going to show you how that process played out in my own account, step by step, until those meaningless small wins evolved into a $10,000 gain that changed the way I trade forever. But here's the part no one wants to admit. Knowing a trick is one thing, having the discipline to apply it is another. Jesse Livermore's size trick works only if you're willing to respect the process. Because let's be honest, it's tempting to take a small win and immediately roll it all into the next trade, hoping to strike gold. That's not strategy, that's gambling. The genius of Livermore's method isn't in the size itself, but in the patience to let the sizing grow as your equity grows. Every dollar you protect becomes a seed for the next wave. Every disciplined decision compounds into momentum. And that's what turns an average trader into someone capable of extracting life-changing gains. I remember the first time I felt the urge to skip a step, to jump ahead. My account had just doubled, and the hunger to push size too quickly almost destroyed everything I'd built. That's the razor's edge where most traders fail. They can't resist the temptation to force the big moment. But here's the paradox. The big moment doesn't come when you chase it. It comes when you let the small wins mature naturally. It's like a tree. You can't yank on the branches to make it grow faster. All you can do is water it, nurture it, and wait. And then one day, it bears fruit so abundant, you wonder why you ever thought impatience was the answer. The more I leaned into this idea, the more I realized that trading isn't just about capital. It's about emotional control. Every small win I respected made me calmer. Every time I waited before increasing size, I felt stronger. And that emotional discipline carried me through the losses, too. Because let's be clear, you will lose. I lost plenty of trades along the way. But with Livermore's trick, those losses didn't crush me. They felt like small bumps on a road that was still heading in the right direction. And that's the difference between a gambler and a trader. A gambler bets until they're wiped out. A trader builds a structure that can absorb setbacks and keep moving forward. I can still picture the moment I broke past the $10,000 milestone. There wasn't fireworks. There wasn't champagne. It was quiet. I was in my office, staring at the screen, realizing that a series of small, disciplined decisions had created something big. And in that silence, I understood what Livermore must have felt. Not excitement, but clarity. The market doesn't reward those who scream the loudest or swing the hardest. It rewards those who show up, step by step, with discipline. And maybe right now you're questioning yourself. You're thinking about your own account, your own trades. You're remembering the times you forced a position, the times you dismissed a small gain, the times you went too heavy too fast and blew it. That's okay. Every trader goes through it. The difference is whether you learn from it, whether you decide to keep gambling, or finally start trading with discipline. That's why I'm giving you this challenge. For the next 30 days, stop chasing home runs. Forget about doubling your account in a week. Focus only on stacking small, consistent wins. Respect them. Log them. Build them. And once you have a series of proof, then, and only then, allow yourself to adjust size. Do it methodically, do it with patience, and I promise you, you'll start to see growth that feels unstoppable. Because it isn't about luck. It isn't about guessing. It's about using a timeless principle from one of the greatest traders in history to rewire how you trade. And here's the truth I want you to take with you. Trading is never about the big win. The big win is just the illusion that keeps rookies chasing. Real trading is about building a foundation strong enough to carry you through losses and still leave you standing tall. Livermore's size trick is that foundation. It's not glamorous. It's not flashy. But it works. And if you respect it, if you commit to it, it will change everything. So as we wrap up this video, I want to leave you with this. Small wins are not small. They are everything. They are the bricks that build your trading future. They are the seeds of compounding. They are the reason I was able to turn tiny scraps into $10,000 gains. And they can be the reason you rewrite your entire trading story. If you found value in this, do me a favor, subscribe to the channel, hit that like button, and share this video with another trader who needs to hear it. And most importantly, drop a comment below letting me know where you're watching from. I always love seeing this community grow across the world, one trader at a time. Because this isn't just about me. It's about us. It's about building a new generation of traders who stop gambling, stop chasing, and start trading with discipline. And it all starts with one thing: respecting the small wins and letting Livermore's timeless trick turn them into something bigger than you ever thought possible.